This week, Alla Valente and Heidi Shey from Forrester are with us to discuss cyber insurance. Then, Joseph Blankenship from Forrester joins us to talk about insider risk. Finally, in the enterprise security news, lots of executives shuffling around. Savient gets a new CEO and $205 million in funding. Forescout appoints its fourth CEO in as many years. Mudge finds a place at Rapid7. More focus on securing small businesses. More cybersecurity startups pairing technology with cyber insurance. Microsoft now has a $20 billion security business. Tyler explains what Herman Miller chairs have to do with spotting market trends. 20-year anniversary of SQL Slammer. Consumers don't want smart appliances. All that and more on this episode of Enterprise Security Weekly.
This is Security Weekly, for security professionals, by security professionals. Broadcasting live from G-Unit Studios in Rhode Island, it's the show where we talk security vendors and aren't afraid to name names. It's Enterprise Security Weekly.
Attackers are only getting more proficient, so how can you proactively adapt your cybersecurity strategy? Core Security by Fortra helps you uncover and prioritize the risks that pose the biggest threat to your organization. Core Impact is a penetration testing tool that safely finds and exploits vulnerabilities using the same techniques as attackers. You can conduct advanced pen tests with ease using certified exploits and automation. Take your engagements further by pairing with our red teaming tools from Cobalt Strike and Outflank. Learn more at www.securityweekly.com/core security. Welcome to Enterprise Security Weekly and happy Groundhog Day. This is episode 304, recorded on Thursday, February 2nd, 2023. I'm your host, Adrian Sanabria, and joining me is the master of marketing, the mayor of mayhem, the chief of chair analysis, Tyler Shields. How are you, Tyler?
Oh, I like that last one, chief of chair analysis. Yeah, that's a very important way to look at markets.
Also joining me is the czar of Zero Trust, the captain of content, the acolyte of artificial intelligence, Katie Teitler. How are you, Katie?
Happy 6 more weeks of Winter Day.
You know, today is also coinciding with Optimist Day. So Groundhog Day and Optimist Day are on the same day this year. Optimist Day is one of those like first Thursday in the month type of things, so it's not always on Groundhog Day. So I don't know if that's a conflict or a contradiction. You know, that you have Optimist
I mean, it
Day.
depends on whether you like cold weather or not.
Yeah.
I happen to like winter, so I'm pretty happy about Phil and his predictions. So it's all good for me.
Yeah, I think it's a good point, but I found it funny. It was on the same day that we're outsourcing our optimism and pessimism to a small mammal. All right. Also joining us is the Baron of Bloodhound, the Pirate King of PowerShell, Sean Metcalf. How are you, Sean?
Doing pretty good. I was quite interested to see what Phil had to say because it's Groundhog Day. So I need to watch that movie. I guess I'm going to have to watch it tonight. As is tradition in my house.
I'm wondering if my kids have ever seen it. I'm not sure.
I was thinking the same thing, Adrian. I might have to introduce my 18-year-old son to Groundhog Day. And actually, my 15-year-old daughter might like it as well.
The worst part is I have a friend whose name is Phil, and every time I see him, I go, Phil? And he just loves that I do it every single time.
I bet he does.
Yeah, my kids are around the same age, Tyler. So yeah, I'm thinking they might enjoy that. And there's so many other movies based off it, right? Like it's like a what do they call it? A trope, right? It's like a movie trope. Like it's Groundhog Day, but in the sci-fi military context or something like that.
Yep.
Like what is that? The Edge of Tomorrow.
Yeah.
Yep. That follows that same trope. You're right.
And then the horror movie series Happy Death Day, which kind of followed the same thing as well. The main character has to accomplish something in order to get out of that loop.
Ah, yeah. Very interesting.
I'm a movie guy, so yeah, that's what happens.
Awesome. Yeah. No, I think we're all movie people here. We've got Cocaine Bear coming up soon. We're gonna have to do a.
That's right.
You do realize the Forrester analysts are on this call going, Cocaine Bear? What?
yeah, there's some yeah, that's kind of a running gag, or it will be until the at least. But yeah, I digress. Quick announcement here: join our Discord channel to chat with our hosts, ask questions, maybe share your favorite movies, customize live stream alerts, and more. Visit securityweekly.com/Discord to get an invite. All right. So today we're going to do a Q&A on cyber insurance. We're excited to have Alla Valente and Heidi Shey from Forrester Research with us today. We've talked a lot about cyber insurance on the program before, especially anytime something is confusing in the market or it's changing a lot or, new things are emerging, we like to cover that stuff, help people understand what's going on. And two great folks to have with us today. Alla covers GRC, TPRM, contract lifecycle management, and supply chain risk at Forrester. Welcome, Alla.
Thank you so much. I'm so happy to be here.
We're happy to have you here. And Heidi covers data security and privacy strategy, policies, and related technology controls. Welcome, Heidi.
Thank you. Excited to be here. And I think it's appropriate. Groundhog Day, cyber insurance.
Yeah. Yeah, maybe there's we can make a connection there. We can somehow connect the two.
Definitely. It's the same thing over and over again, right?
Mm-hmm.
Well, you have to keep reapplying, right?
Exactly.
Every year.
Right. Is it the insurance companies that are trapped in the loop? Is that how it's? Because it seems like
we're all trapped in the loop, Adrian.
We're all trapped in the loop.
Nice. Yeah, and it just seems like we keep coming at the day differently. Trying different things. So that's before we get to that, let's maybe cover some foundational stuff. Like how long has cyber insurance been around now? Does anybody know? I actually don't. That was a shot in the dark. I wasn't sure if anybody knew the answer to that.
I think we looked this up, Alla, when we were looking into the topic. It depends on how you define when's it been around. Like it's been talked about for decades. Mm-hmm. If I look back into the last couple years, I almost feel like maybe around 2017, 18 was when I was really starting to see a lot more questions and discussion from our clients and customers around the topic of people asking, do we get this? Is it worth it? That was what people were asking a couple of years ago. But before that, there wasn't much.
I think that's the important.
It has existed before that.
Yeah, I think when it got interesting, people started to really need it and ask about it, and then the insurance companies started to try and better design it. I think all that's happened within like the last 5 or 6 years, right?
Mm-hmm. But the term, or at least the concept, predates that.
Absolutely. Sure. I mean, the structure or the concept of cyber insurance has actually been around for quite some time, definitely over, 20 or 30 years. But what it's been used for and when it became a structured insurance vehicle and started gaining the type of adoption, that's been definitely much more recent. And, it's kind of like buying an umbrella, right? The most inopportune time to buy one is when it's raining, and goodness, it's definitely been raining quite a bit lately.
Yeah, definitely. Yeah, and it's been a hot topic for the last couple of years since ransomware has hit so many organizations, and we've heard stories about insurance providers pulling out of that market, deciding not to offer a cyber insurance product. And then the thing that's really interested me are the startups that are starting to combine these things. Like I had to learn the terms MGA and MGU, I think the two terms.
MGA for managing general agents, and then I've also heard the term insurtechs get tossed around.
Yeah, where all of a sudden you have like cybersecurity products combined with insurance. So like they'd use the products, I guess, to figure out how to price the policy, and And there's just so many things to talk about here. But yeah, let's just start with like, what are companies having to go through to get cyber insurance these days? Let's start there. Like, how do you, like, in the old days, I understand it's like anything else. Like, you fill out a form, you fill out a questionnaire. But how's that going these days? How has that evolved?
Still very similar. You're still filling out some type of form to provide the insurers with information about your controls, your approaches to risk management, your security program. I think maybe back in the day, could have been paper. These days, you've got portals through your broker's website or something where you can input information as well. So there's different ways. I've also heard of companies where you have the CISO, for example, putting together a presentation that they now present to a room full of multiple insurers, talking about their security program, being able to do Q&A to clarify anything to that room, where then they can then come back to you at a later point with various quotes for what they're able to provide you in terms of coverage. But the ask in these questionnaires are getting more intense. So we've spoken to folks who tell us they spend like 4 or 5 months preparing for these cyber insurance renewals, because that's how long it takes for them to gather all the necessary information, fill out these forms.
Wow. That sounds more like getting a SOC 2 or something like that.
Hundreds of questions. Yes.
Yeah. And we've been hearing, when just following the emerging market, we hear about some of these folks using doing external scans, much like a bit site or a security scorecard would do, and partially using that to determine, I guess, a level of risk for the insurance provider.
Yeah, I mean, we've definitely seen that, where those types of tools are being used to help to price the insurance policy, but the external scan alone won't give insurers the complete picture, because they also want to understand what type of policies they have, what type of procedures, what's the maturity of their cyber risk management program. Do they have resources that are dedicated to this, or is it more just an afterthought? So it's both that external scanning, but it's also combined with a lot of the internal evaluation questions, which is why these questionnaires are becoming just so huge.
And another, I think frustration, or maybe not frustration, but difficulty that I hear CISOs talking about is getting the amount of coverage that they want. So first of all, figuring out how much coverage they need. But oftentimes I hear about them needing to go many different places because they're maxing out, I guess, the risk appetite of some of these insurance providers might be at like 5 million or 10 million, and maybe they need 20 or 30 million in coverage. So they have to go to, I guess, different providers to get that. So how does all that work? Like figuring out, first of all, how much do I need? And then going out and getting that when you can't necessarily get that from a single, one-stop shop.
That is not an easy thing to answer. Like defining appropriate coverage, it's going to vary a lot based on, because cyber insurance doesn't cover all of your costs, right, associated with some type of cyber event. It's only maybe some of the costs you're likely to insure. So it's sort of this thinking through of, what is your potential exposure? What's your risk tolerance? What's your comfort level for financial risk of how much you're willing as an organization to cover versus what you're probably expecting the insurance portion to cover? Some of this you can do maybe through like modeling potential remediation recovery costs. So some CISOs will go to the point of trying to price out, X number of hours of incident response services, how much is that going to cost them? Or looking at cost of what's a breach attorney, hourly rates, legal defense, PR costs, that type of thing, to try to get some type of rough estimate for a particular scenario for what that could look like.
Yeah, and
I imagine.
And I would add to that organizations who are quantifying cyber risk. So if they have some sort of cyber risk quantification program and tool in place, what they can better understand is how much cyber risk they hold and what portion of that they might want to remediate. And whatever the leftover, whatever the residual is, would require some sort of cyber insurance coverage. But I would also say that another factor in determining how much you need is also based on your customers and your third parties. So we're seeing more and more that cyber insurance is becoming a requirement of RFPs just to do business. It's becoming almost like a commercial term. And depending on what level of coverage those RFPs might require, those numbers would start to add up and then also expand your need for cyber insurance.
Right. Yeah, and I understand you got to be careful. Careful to read all the details, because if you do want to use insurance for incident response, for example, like maybe you have to use the company they choose. In many ways, you don't really get to call the shots anymore if you're wanting them to pay, right? Like you got to do it their way.
Potentially. It seems like it's becoming less of an issue because a lot of the big incident response services providers are already on these panels that the insurers have of providers that they've approved, they've pre-vetted. So chances are, if you're working with one of the major ones, it's on this list somewhere. So the insurer is familiar with them. I've heard of other cases where the enterprise goes ahead and writes into their policy their preferred provider to make sure that, yes, if something happens, they can use the one that they want to use.
Yeah, Sean, I think you had a question.
Absolutely. So obviously there's no one size fits all. Heidi, you definitely hit that nail on the head, so to speak, as far as coverage goes. Have you seen an expansion? I mean, certainly with companies as they grow, certain companies grow through mergers and acquisitions and acquiring other companies. There is a risk involved with that. And there's due diligence, obviously, with acquiring another company to try to identify what sort of risk you're accepting by bringing them on. And there have been issues with breaches in the past where a major company acquires another company of mid-size or fairly large size, and then that company has a breach, which then has some impact on the acquiring company. Have you seen more of an expansion in this area around mergers and acquisitions sort of coverage as part of cyber insurance, or is this something that's still kind of evolving?
That's a great question. I don't think I've seen mentions of this. I would imagine that during a renewal, they would want to now consider this and fold it in. But if this was something that happened partway through, where the policy was in effect from the prior renewal, chances are it's not getting covered here. What do you think, Alla? Have you heard anything?
I mean, there's definitely been a lot of M&A activity happening, certainly. And when those mergers and acquisitions happen, I know some of the questions that I get pretty often is, okay, well, whose security program, whose security tools are we going to use? But if you're in the middle of a policy and you've already responded to the questionnaire with specific terms, you can't switch it midway, because then the insurer will say, well, you told us you had X, Y, and Z. Turns out you ended up with something different. Perhaps maybe this is no longer coverable. So I think that companies just need to be careful during those M&A activities to make sure that how they've responded to those questionnaires is still valid and in effect throughout that term or until they renew.
Okay, and a quick follow-up to that. Now that we're seeing attackers sort of pivot from this hardened environment, let's say that a company has really leveled up their environment. They've done assessments, security assessments. They've gone through and done their due diligence in identifying those risks and issues that they have. They've accepted some of them. They've resolved some others. Now that attackers are also pivoting to third-party vendors, those that may have access to manage it, sort of like a managed service provider or a cloud service provider. Are you seeing a shift as well around that where those get captured as part of those initial analysis, that long questionnaire that was mentioned that has hundreds of questions, where they're asking about who are your vendors that have the ability to manage your system and what is that relationship? Are you seeing that being involved and incorporated more into the policies, or do you think there's the industry is still shifting in that direction?
That's an interesting question. What I have seen is questions surrounding third-party risk management programs a bit more broadly. So the level of assessment, the types of technologies they've invested in, what that program looks like, less so around specific vendors or specific third parties. I don't know, Heidi, have you seen something different?
The only thing I can think of is the cases where it's like a special type of like insurance policy that's tied to a specific kind of provider. Like I'm thinking of programs where, Google had this thing like Cloud Protection Plus, where it's like if you're using Google Cloud, like GCP, and enabling their controls to protect the environment, and you're purchasing the insurance policy through whatever that special program is, then that's one way of getting additional coverage. But that's a little bit different, I think, than what we're looking at here in terms of the third parties and the risks that they pose specifically.
Yeah, so I have a follow-on question on that. So have you been seeing cyber insurance firms requiring certain technologies? So what I mean by that is a number of vendors out there have tried to use cyber insurance as a sell-through channel. For example, a company that does vulnerability management, for example, might sell through an insurer. So the insurer says, look, if you use Qualys, Tenable, insert Vol Management Company X, if you use this, we give you a discount. And then obviously that discount comes back as a kind of a sell-through channel. Are you seeing anything around that sort of kind of partnership between cyber insurance and vendors?
Oh gosh, it's a whole program. Like Marsh has the Cyber Catalyst program. That's pretty much this. Like they've got annual cohorts where security tech vendors can apply to be a part of it. They get evaluated. If they make it onto the list, then they're considered a cyber catalyst. And if companies are using them, they could potentially qualify for a discount. So it is happening. And I've heard of cases where you even have your brokers making recommendations to policyholders of saying like, hey, if you were to do X, Y, and Z things to improve your program, consider these controls, then that potentially puts you in a better position when you're renewing or applying for your policy. The caveat here is that this advice is not always well received. You've got some organizations where maybe they do need that guidance and that help, and they're listening to their broker, and it's great. You've got others who feel like, why is the broker telling me this? This doesn't make sense. It feels like they're being too pushy, trying to sell these tools that may or may not even make sense for their program. So it can really go either way. And the guidance that we typically give our clients is that, you're not going shopping based on whatever is on this list. You want to be buying the tools, technologies that make sense for your program, your needs, your fit, your environment. And if it happens to get you a discount, great.
Yeah. And not only that, but you run into the potential ethical concerns here too. If I'm a cyber insurance vendor, broker, whatever they're called, and I say, hey, if you use, again, I'm just picking a random company, if you use Qualys, we'll give you a 10% discount. And then Qualys kicks me back, a certain amount annually on every deal that I funnel to them. The ethical dilemma of recommending a certain protection tool in an insurance capacity also could cause concern, right?
Potentially, yeah, depending on how it's all structured. Like right now, I don't think we're in that kind of sticky situation.
Yeah. One thing that is interesting is that a lot of these cyber tools and technologies are also being adopted by the insurance companies themselves, where they're using those tools in their underwriting process. So perhaps if they're using tools internally and then making those recommendations, it might also be because there's been adoption. They know how to use them, but they also know how to interpret them.
some of the gotchas for buyers? Because we know that insurance isn't a catch-all. We know it doesn't cover every situation. So what questions should businesses be asking when they're shopping around for insurance to make sure that they're getting the best coverage, they're most likely to be covered if an incident or an event happens? If a breach happens, obviously it's up to them to do their due diligence. But what are some of the top tips you have for people who are either looking for new or looking for, alternative coverage for insurance?
I think go ahead, Alla.
No, why don't you start?
I guess the thing that comes top of mind for me is, make sure that if you are trying to buy insurance to cover cyber, that you are actually buying a standalone cyber insurance policy. That's probably the key thing, because if you're trying to get coverage for cyber through other types of business insurance policies, whether that's through like a property policy or some other kind of liability policy, or it's not really covering what you think it's covering. And increasingly, these other policies are not covering cyber events. And that's where oftentimes when you see in the news these stories of lawsuits between a policyholder and their insurance company, you dig deeper and you realize that the policyholder very likely did not actually purchase cyber insurance, but they were trying to use an existing policy to cover some type of claim relating to cyber.
So they're getting confused and trying to get a bundle, really.
Mm-hmm. And I think the confusion could come from both sides as well, like the sellers, the brokers, as well as the buyers themselves, because there's these assumptions that are being made about the terms in these policies and how they're being defined.
Yeah, we've actually, in the news fairly recently, I think we saw a case in Ohio get decided in the favor of the client who had the policy. It was one of these cases where, they didn't want to pay out if the attribution of the attack was like a state-sponsored attacker or something like that. One of these like trying to classify it under war, or some exception, where the insurance company didn't have to pay out, and I think they lost that.
Yeah, I mean, it's really small, nuanced language makes a really huge difference, especially with clauses around things like acts of war, how different policies will define war, whether that is physical only or digital. There's also this concept of silent cyber. So as Heidi was mentioning, other types of insurance policies that are not specific to cyber, but also if they don't have language that specifically excludes cyber attacks, then those are silent cyber loopholes. And it was back in 2021, State of New York Department of Finance created a framework that specifically said, hey, you insurance companies, you have to do these things, just to make sure that you're still solvent, you're not losing money. And one of them was go through all of the policies that you offer. And if it is not a cybersecurity policy specifically, then close that loophole, change that language, and make sure those exclusions are clear. And we saw that during COVID, where a lot of companies that were experiencing cyber attacks, they had other types of policies around business interruption and other types of general business or all risk policies. And they were filing to try and get reimbursed for those cyber attacks. But because these policies didn't say, nope, cyber definitely doesn't count, they were getting paid. And, look, the insurance market is not a nonprofit, right? They're there to make money. And so they need to make sure that they're tightening their contractual language and make sure that it's clear. But on the flip side, as organizations are looking for policies, they really, really need to very clearly read those terms to understand what it includes, but also what it doesn't include.
Yeah, that's something I've seen more often now as I look at some of these new cyber insurance policies and brokers pop up. It is being extremely explicit to the point to where, like I'll browse past some of these cyber insurance websites just to get an idea on how attacks are trending and changing. Like one of the things I saw covered that I had no idea was going on was bricking. Instead of encrypting data to ransom something, apparently some of these ransomware groups are just destroying machines. Like making them to where they won't boot anymore, just bricking the firmware on systems. And because the insurance company says it covers it, I assume this must be going on, but I haven't seen any evidence of it in the news. So, like, I've been using some of these more open, and explicit cyber insurance providers just to figure out what's going on with threats. Just to see what trends are happening there. Over to you, Sean. I think you had another good question.
Thanks. So in the past year or so, there have been newer players, or at least I've seen some newer players, or at least some more novel approaches to cyber insurance in the space. These companies promote AI-driven or automated monitoring tool approaches to setting policy coverage and pricing. And since the really tough year 2020, when ransomware was just decimating companies, cyber insurance companies have been asking for more specific questions like what service accounts are members of highly privileged Active Directory groups? How many admins do you have? How is your environment configured? Do you have Exchange on premises? Things like that have been asked. So do you see the cyber insurance market shifting to more specific insured customer data-driven model around that? Or do you think this will result in potentially lower prices for companies that need cyber insurance, or even just better policies?
I think probably all of the above. Like there's certainly a trend moving towards getting more specific in terms of what controls are required. But as you've mentioned, there's also all these really interesting new players popping up where I see more of them in the services space, like security services plus some type of cyber insurance policy being sold together, where the benefit is now you've got these experts, this firm that's offering maybe security assessments or some type of security monitoring service, who's hands-on within your environment. And so the policy that they're now selling, they've got greater assurance that the proper controls are there, or at least they're configured correctly. And if anything is happening, they're the ones that are responding to these alerts. So that is where I think I'm seeing more of the opportunity, at least in this market, is when you're combining some type of security service plus the cyber insurance policy. And we've seen this happen more in the SMB market, because that's where I think the demand is highest, where they do need that help.
So in terms of some of these tools that are coming in, Sean hit on a keyword for me, AI. And as companies are looking at tools and they're looking at what to implement, and the insurance firms are looking at the data they're getting, when it comes to machine learning and AI, what are some of the pitfalls that companies have to look out for? Because if the algorithms aren't tuned correctly, they could be getting bad advice, advice in quotes, bad data out of the tools, and that could potentially affect their security posture. So is there a danger there on both the business, i.e. consumer side, and the insurance side, if they're getting bad data out of those tools to evaluate whether or not to cover certain things or how much to cover?
I think this concept of bad recommendations or false positives have been an aspect of cybersecurity rating tools historically as well. I think the focus here, though, is on the continuous monitoring aspect, because companies change over time, their security posture changes over time, but also the types of attacks that they're exposed to is also changing. And what we've seen the insurers starting to do by leveraging these AI-driven real-time tools is to say, we're not only going to evaluate this particular company's security posture when we're underwriting, but we're also going to implement this notion of monitoring continuously. We've set up these specific thresholds of what's acceptable. Maybe it's based on the policy, maybe it's based on the company individually. And when their cyber posture falls outside of that, or if there are specific alerts that pop up that exceed that threshold, that's when the insurers are going back into saying, okay, we need to relook at this, or maybe follow up with the company themselves and ask what's going on. But I think that the AI is being used more from a continuous monitoring perspective.
Yeah, it's interesting.
Does that in any way infringe upon certain privacy or intellectual property types of issues if there's continuous monitoring from the insurer's side of the consumer's environment?
Well, they're continuously monitoring, I guess, a few things. They're looking at the controls and whether or not these controls are effective or whether they've failed or not. But they also are using the cybersecurity ratings to do these types of external scans. And through those external scans, they're not so far we haven't seen any of that type of privacy or IP infringement because this is what the organization puts out publicly.
I think there's going to be different appetite for varying levels of access to the enterprise environment, varying levels of monitoring for purposes of cyber insurance. There's going to be some organizations that may welcome it, because they may find it useful, helpful as a part of getting their cyber insurance coverage, whereas others may draw a hard line in the sand and go, well, nope, we're not going to do this. And there may end up being different types of policies, different structures, different segments of the market where these things are also aimed at servicing. And it also depends on how we're looking at monitoring as well. I think if we're looking at the US, if we're looking at Western Europe, there's going to be a lot more hesitation for this type of hands-on, continuous type of approach. But already in places like Japan, we've seen some policies where in order to even qualify to purchase the cyber insurance policy, you are allowing the insurer to install basically EDR agents on all of your devices, and they're the ones monitoring it for you. But that's being sold as like a value add of getting cyber insurance in that market.
Yeah, I think we've Sean's pointing out we've seen that in cars. Like get a reduction on your rates if we can put this device in your car and verify that you're not speeding, you're not driving recklessly, anything like that. But Katie, go ahead.
That's actually the answer. I was musing on the idea of, will it be similar to car insurance? Will the insurers then offer benefits to the companies who are like, yeah, sure, go ahead and monitor my environment, and those who are a little more risk averse, a little more privacy forward, even if it's not invasive monitoring, which I understand it won't be, but it could potentially offer up benefits to companies who are just a little more skeptical. And I'm not sure that feels right. I'm not sure what the answer is, but I'm not sure it feels right. Like, hey, let me monitor you, and then you get benefits. That makes me personally a little uneasy. So I guess it's good that I'm not making those decisions for my company.
Well, it paints a target on the insurance. The insurance company, right? Like if they've got access into all these, we've already heard that that's how a lot of ransomware crews decide how much ransom to ask for, is they figure out what how big of a policy they got first, and they'll ask for 80% of whatever that policy is or something like that. Heidi, Alla, do either of you have a sense for if this is experimentation, or if we're going to see things like continuous monitoring sticking around long term?
It feels like it's more than experimentation. My sense is that it it will stick around, but also it will evolve based on just that privacy appetite of organizations. Because if they don't want to be monitored, but they desperately need that insurance for whatever reason, maybe their boards are asking for it, maybe their customers are asking for it, then they're going to have to find some sort of middle ground for it. But, as with anything, right, we do things that are bordering on creepy, someone pushes back, and then there's change in the market. So if it does, I think, go in that direction, then we'll probably see change. What do you think, Heidi?
I would agree. There's so much pressure on the insurers today to stay profitable, but then also stay in this business, that something has to change. And every step of the way where we've seen some major change to cyber insurance, cyber coverage, these policies, it's because of these points of evolution where something has gone sideways.
Yes.
And something had to change.
Yeah.
Like with the war exclusions is a big one, like NotPetya, that kicked off a lot of this, the efforts to close that silent cyber loophole, to really firm up language around war exclusions as well.
Yeah.
Yeah, I think it was Merck who had the big fight, right, over getting something paid out, the big shipping company that was shut down for a while.
Mm-hmm. I think yep, they were one of them.
Yeah, Maersk.
But yeah, I was just sitting here thinking, like, what about insurance in other markets? Like, are there insurance companies with direct access to surveillance cameras in businesses and things like that? Or, this seems like it's pretty unique to. Well, I mean, there are a lot of unique things about cyber, I guess, but I don't know, like, how common this is in other insurance markets, because I'm just not familiar with insurance in other markets, at least not business insurance.
Yeah, I'm outside of cyber insurance. I'm not as familiar with those business technicalities. I would say, though, let's say you have some sort of insurance specifically for things like fires and floods, you would have the insurance representatives coming in to make sure that you've fireproofed, that you have, your structure is up to code. And that can also be seen as a little bit more hands-on. I think, though, because cyber insurance market is a bit newer, in some ways, we might see some of those same requirements from other industries, but at the same time, it is so unique, right? The cyber landscape continues to evolve, and it's so hard for the insurers to just constantly not only keep up with what the new threats and new attacks look like, but then also go back and rewrite all of their contractual language. So yeah, it's a bit of a unicorn when it comes to insurance.
Yeah, so we've got some links in the show notes to some of the reports that you've both worked on. But is there anything else up and coming? Any new coverage or additional coverage you're doing? Any webinars? Anything like that you want to share with the audience?
We do have one more report that if we in the middle of writing now. So this was a series of 3, and this is the third one that's coming. So this third one is focused on, we're calling it like the CISO deep dive. So it's more of an in-depth look at, well, what does cyber insurance mean for a security program? How does it impact incident response? What are some of the common control requirements that the insurers look for? What should you expect, in the claims process? And then also, what's the role that the CISO can expect to have in a renewal process for insurance? So those are some of the things that we're going to address in the next piece that we do.
Yeah, it sounds very interesting. Any idea when that's general time frame when that's coming out? No pressure.
Ooh. I did in March. Right, Alla? This is also with Jess Byrne at Forrester, who covers incident response. So we're teaming up with more folks.
Smart answer, Alla. I think all of us here, except for maybe Sean, used to be industry analysts. So a lot of us can relate with that. Well, thank you so much, Heidi and Alla, for joining us on Enterprise Security Weekly today. This is a lot of fun and one of these kind of fast-moving areas that we like to keep an eye on. So thank you for coming on to help us out with this.
Thank you.
Yeah, thank you.
All right, stay tuned. When we come back, we're going to talk insider risk with Joseph Blankenship, also from Forrester Research.